This is The Chase, Zimbabwe's premier current affairs program. I'm Ibn Nabunda, and we're coming to you from Zimbabwe's capital, Harare. Now, tonight we turn our attention to a topic that affects every Zimbabwean, our economy as well as the local currency. Recently, the Reserve Bank of Zimbabwe released its 2026 monetary policy statement, of course, giving us an indication of measures aimed at stabilizing the ZiG currency, controlling inflation, and restoring public confidence in the financial system, of course, courtesy of the Reserve Bank of Zimbabwe. Now, among the highlights are the introduction of the Big Five upgraded banknotes, the maintenance of a 35% policy interest rate, projected single-digit inflation, and measures to deepen the use of the local currency, including a 30% export surrender requirement. The statement also seeks to make cash more accessible by reducing withdrawal charges and ensuring smoother liquidity management across the economy. On The Chase, we ask, what do these measures mean in practice? Are they a genuine turning point for monetary stability, or just another step in Zimbabwe's long, winding journey toward economic confidence? Is inflation finally under control? What's happening to the value of the ZiG? Will businesses get relief or feel more pressure? Is this the boost the Zimbabwean economy needs? And our discussion, Monetary Policy 2026, anchoring expectations or managing reality. In the studio, I'm joined by Gladys Mutsopotsi Shumbambiri, business and economic analyst, Mishek Ugaro, president, Zimbabwe Economic Society, Persistence Gwanyanya, Monetary Policy Committee member of the Reserve Bank of Zimbabwe, Denford Mutashu, President, Confederation of Zimbabwe Retailers. Ladies and gentlemen, welcome to The Chase.
Thank you, Ivan.
Fantastic. Please note that the views expressed on The Chase are those of our guests and do not necessarily reflect the views of Zim Papers Limited, 1980, or those of ZTN Prime. Now, to break the ice, what would be your sentiment? I'll ask this to all of you, starting with Mr. Mishek Ugaro, to say, what is your sentiment against the presented monetary policy statement?
Thank you, Eben. I think that by and large is a positive statement. It aligns to what we expected, say for one or two issues. But I think the policy statement confirms the direction which we are going, where the tight monetary policy used for driving inflation down and keeping the exchange rate stable has actually succeeded. That buttressed by the big inflow of foreign currency receipts, the rise in foreign currency reserves for the country. And I think the policy statement actually says, or when the governor was presenting, he actually demonstrated to us that the implied exchange rate is about 14.2 ZiG to the dollar, showing that the difference between the 14.2 to the current willing buyer, willing seller rate of 25 just is about confidence. So basically what we are looking at now going forward means addressing the confidence gap. But right. Otherwise, very positive. That's what I would say.
Right. I'll relay the same question to you, Gladys. Your sentiment against the presented monetary policy statement?
Thank you very much. My sentiments are that the monetary policy is on a positive direction. I really liked the scrapping of the bank charges,
right,
which will be boosting confidence for our consumers, which will also cut on their expected transaction costs. So in that regard, just the issue of the bank charges, which is one of the pertinent issues when we talk about financial inclusion, that is a very, very positive development, which is also going to enhance financial inclusion, even from the grassroots level up to the urban areas.
Right. Your sentiment, retailers?
I think it was a very difficult task for the governor, but not too difficult because I think the economic stability, banking on exchange rate stability, currency stability, inflation stability, made the governor's job easier because it was very difficult at the beginning. But where we are as a country, it is not only an economy that is stabilized, but the economy that is growing. So from the retail perspective, one of the key issues was the issue of change, which has affected the majority of the members of the public when are transacting in supermarkets and shops, be it formal or informal. So the governor has solved the problem by reintroducing the ZIG coins. But of course, not only that, one of the concerns was the quality of the ZIG notes. So, we were at the launch, or rather at the police pronouncement at the Reserve Bank, and we touched and felt the new, ZIG notes, and surely the quality now competes with the quality of the notes that you can find in the region, including the South African rand, right from the 10 ZIG, the 20 ZIG, the 50 ZIG, the 100 ZIG, and the 200 ZIG. The quality is top notch. So I think that on its own actually buttresses the engagement realities that we have had in this economy, because most of the issues that the governor addressed are issues that we partook building up to the pronouncement of the monetary policy statement through various engagement of various stakeholders. And I'm glad that even on the day of the policy pronouncement, various stakeholders cutting across the breadth and width of the economy were in attendance. But safe to say, Eben, that in the retail and wholesale space, remember we've got the formal and the informal retail space. But the governor doubled the TFF from 600 million ZIG to 1.2 billion ZIG, which means that even in the informal sector and the formal sector can access that facility, because one of the concerns was access to concessionary funds that business can actually be able to deploy in terms of capital enhancement. But overall, I think as business community and the retail sector, we are quite happy that most of the issues that the governor addressed are issues that we had raised prior to the policy pronouncement.
Right. You sit on the Monetary Policy Committee of the Reserve Bank of Zimbabwe. What was the intention with the presented monetary policy statement?
I think there's consensus in the economy that the environment has generally been stable. And naturally, the expectation in that environment is for monetary authorities to come up with measures that guarantee or that support durable stability. And this is essentially what I see coming from the monetary policy statement that was presented by the governor. Not much changes from the current policy regime that is maintaining a prudent monetary policy stance. As they say, and especially in the Zimbabwean context, that inflation is always and everywhere a monetary phenomenon. It is very, very important that the monetary aggregates are contained, which is essentially what is coming out of the monetary policy statement. Yes, we're projecting stability for the rest of the year, but as we get into that space of stability, you also need to start looking at the savings culture in the economy. And the central bank tried to get into that space by some policy measures to start supporting the savings culture by setting the deposit rates which are actually positive and above inflation. For the ZIG, the deposit rates for the current account at 5%, and for the term and savings account at 7.5% reflect positive real deposit rates, which speaks to the recognition of the need to mobilize savings to support economic recovery. So on that score and all other factors that will support the ease of banking, you see, remember the colleagues are talking about the reduction in charges, bank charges, waiver of the balance inquiry charges by the central bank. All those are meant to support the cost of banking, a lower cost of banking. But we understand currently the country is going through an aggressive ease of doing business reforms, and 5 sectors have so far gone through the exercise. The expectation is the banking sector is also going to go through that exercise. We expect now, taking a clue from what is coming, the central bank has already gone in the positive territory in taking a clue from the ease of doing business reforms by reducing the cost of banking. So cost of banking is a key issue, and we are happy the central bank has started looking into the cost of banking. So what we want to see in the end is increased use, acceptability, and circulation of the local currency. We've done quite well in terms of managing the supply of that currency. Hence, the theme of the monetary policy statement was to deepen the usage of the local currency. But you want to agree with me that deepening the usage of the local currency, the central bank, yes, it can do certain measures to deepen that, but mainly the key driver of that imperative are the fiscal authorities or government in general. But the central bank has actually sent message and clue to the market that to sustain this stability, we need to get into the frame of deepening the usage of the currency. So it has to have more options to use, which we call the use case of the local currency. It has to be more acceptable. It has to be more available, and therefore it also has to circulate extensively in the economy. But money is demanded not for its own sake, but for what it does, which speaks to the options that are available for use of the ZIG currency. And we are happy all those issues are charged, which gives me some confidence of the capacity of this country to deliver durable stability.
Right. Speaking of stability, you did make reference to the fact that there would be the aspect of this increased circulation of the currency. I'll direct this one to you, Gladys. I was in Bulawayo a couple of months ago, and I met one of my uncles who asked me if I could give him a copy of the ZIG. And they did actually have to put it in a picture frame. I'm saying this to exemplify the degree to which there has been the non-availability of the printed ZIG copies out on the market. Against the context of the stability that's been said, what's the quality of the stability on the market, and to what extent would the increased circulation of the ZIG prove to be a game changer where this market is concerned for the citizens out there?
Thank you very much, Iban. So when it comes to the issue of stability that persistence is talking about, it will rely on also the fiscal authorities. We understand that the fiscal authorities, they also have some government payments to pay. Considering the lot of construction that is happening in the country, the government has lots of payments to make to that construction sector. So this stability will also rely on the spending pattern or the spending character of the government. So when we talk of the stability, government spending will have to be controlled, because if the expenditure by the government in terms of paying of these contractors is going to be on the high level, it is going to be difficult to maintain the ZIG stability. That would be my response to the question on stability.
Mishek, I was at Parliament 2 days ago when Central Bank Governor was presenting the monetary policy statement, and the feedback from the parliamentarians was that for us to really believe that there is that degree of stability with the ZIG, we should be able to pay for fuel using this very currency. We should be able to buy passports using this very currency. How stable is the ZIG against that backdrop?
Yes, it's a genuine sentiment. However, as an economist, I do understand the technicalities and the difficulty that is there for it to happen right now. I'll try to maybe unpack the challenge that the authorities do have, and I'm not speaking on their behalf, but I understand it. The current reserve situation that we have now of about 1.2 billion covering 1.5 months import cover is not yet adequate for us to do fuel in local currency. I think if we can build up the reserves to about 3 months to 4 months import cover, I think the authorities will be confident to say everything can be done in ZIG, so that they know there's adequate cover to cover import requirements for, or enough quantity to support import requirements for fuel. The challenge that will be there is rushing it into buying fuel in ZIG. We may end up having shortages again if we rush it like that. So it's a technical thing, but I think what the authorities need to do is to come out clearly and they try to explain to the market that these are the conditions precedent for us to arrive there. We are going there. We started from 0.18 months cover of imports. Now we're at 1.5 months cover. We will soon be at 2 months, 3 months. I think as we build up on that trajectory, definitely fuel will be available in local currency. That's number one. Number two, if and our government, I think colleagues have spoken about the fiscal side, begin to increase their requirements or payments of taxes in local currency, it will drive demand for the fuel sector to want ZIG. So they will start wanting to sell in ZIG so that they can meet their tax dues in ZIG. However, that can only happen if they are also guaranteed that there's enough reserve with the central bank in foreign currency for them to then apply for Forex to import. So those are, for me, two critical technical points that I think we need to go out. I take that responsibility as an economist to also educate the market that this is the idea. Ideally, yes, that's where we want to go, but I think it can't happen immediately, and it's understandable.
What would that mean from industry perspective, retailers' perspective, the increased circulation of the ZIG? What would be the impact of that where you are concerned, retailers?
I think we also have got to be realistic that of the structure of the economy and the fact that we have at least 2 or 3 dominant currencies in circulation, the ZIG, the US dollar, and partly the South African rand, if we look at the southern part of the country. Of course, a little bit of the Botswana pula. That's a reality. And I'm happy as business if we don't have or we don't experience fuel shortages. Remember the times of the fuel queues. And one of the biggest problems we had then was a government trying to make populist decisions in order to try and please the publics, or if there's an outcry to say, can you sell the fuel in the local currency, and government concedes to that, and then at the end of the day, the fuel players are not able to restock. So an ideal scenario is where fuel is abundantly available, and I would even encourage government to continue to sell fuel in US dollars as long as it is available, because we are in the process of building up on our reserves. We are sitting on 1.2 billion. And that's 1.5 months import cover. Ideally, we should be sitting on a 6 months import cover for us then to be able to have sufficient ground, despite all the stability that we're talking about, sufficient ground for us then to be able to say we can move in and ensure that everything else can be sold in US dollars. But I'm happy that the governor also addressed a fundamental key area of the transition to monocurrency, because it had caused a lot of anxiety in the economy. Remember, there was an indication before that by 2030, the country should have transitioned to a monocurrency regime. But the governor addressed it, aptly by actually indicating that this is no longer debt-based. It is now conditions-based. And one of the key conditions is the building up of our reserves. One of the conditions is economic stability. One of the conditions is currency and exchange rate. Not only stability, but a disciplined foreign currency management system that does not take us back into shortages, that does not take us back to a lack of quality pricing of the foreign currency itself and its availability on the market. And so far, I think you may agree with me that there's serious decimation of the parallel market and the black market for foreign currency. No one has appetite really to go into under a tree in order for them to transact. Most of the companies right now are satisfied with the financial stability, financial services sector stability, to the extent that even if you look at the deposits, despite the issue of the challenges that we've got, safe deposit boxes that are managed elsewhere, but a serious business person right now can easily bank with a local financial services sector, knowing fully aware that they can still be able to go back and get their money back. And the governor also assured the country and the economy by actually highlighting that contracts at the appropriate time that we are going to transition to the monocurrency, contracts that are in US dollar will actually continue to be met in US dollars, because that was actually one of the key challenges that we were facing. But overall, we still have, I think, the ZIG constitutes between 30 and 40% of the currency in circulation. The country is still largely depending on the US dollar. And not only that, the country still is an issue of the informalization, which right now has been addressed by His Excellency, the President, Comrade Dr. Emerson Dambuzo Mnangagwa, through the reforms that have been instituted through a statutory instrument which took effect a few days ago. The ease and cost of doing business reforms was one of the issues that continued to push businesses deeper into the informal sector. But because now it is quite cheaper for someone to regularize and to formalize, I don't see any reason why most businesses that are in the informal sector will continue staying there.
Right. I'll relay this question to you, Persistence, to say there remains a great degree of skepticism on the market owing to yesteryear fears. We've had many currency false starts, and now there's talk of including high denominations of the ZiG, increased circulation of the ZiG. The question is, what's different between now and what we have seen in the past? And what guarantees can you give as the Monetary Policy Committee that this stability that we have seen, this version will continue to be in place moving from this point?
Admittedly, the history, our history has not been so great, so good, and hence the need for reforms. The country embarked on reforms in 2018, October 2018. And among these reforms are also financial sector or financial reforms. And one of the key financial reforms is the introduction of the structured currency. You can see from the structure of that currency or from the structured nature of that currency that it is intended to restore some confidence in currency, but also some confidence in the policy, in that at any given time, our currency is now fully backed. Our currency is backed by foreign currency and precious minerals. That is important to guarantee stability, to guarantee convertibility of currency. You can't be talking of availability of foreign currency and yet that is not self-executing. It has to be self-executing, that anyone who has a genuine need for foreign currency to import should be able to walk in the bank and get that invoice paid through the willing buyer, willing seller market. This is one of the measures meant to restore confidence in the financial service sector. You can see from the monetary policy itself that the monetary authorities tried very hard to maintain their fiscal, their monetary policy stance despite pressures. So I'm sure the key concern from the market was on the need to ease the monetary conditions. There is pressure, there was definitely pressure from the market
The policy,
to ease
right.
monetary conditions. But basing on historical experiences, the psychology of money, but also experiences in other countries, the central bank chose to maintain the monetary policy stance, the prudent monetary policy stance, which speaks to the need by the central bank to restore policy credibility. Despite the pressures, you continue, you forge ahead with the policies that are giving you results. And even the communication from the central bank, you want to agree with me that there's been significant improvement in the communication in the media space and in different spaces. We see the central bank trying to explain its policy, and this is very important for policy. It has to get to the people and to be clearly explained. And you can also agree with me that despite the pressures that we see on the fiscal front, but there's been significant complementarity between the fiscal and the monetary authorities, save for the areas, but we agree that in the past, one of the biggest challenge which was driving volatilities in the market was monetization of deficits.
Yes.
But for a long time now, the deficits have been kept below 3% by the Treasury, and this year we expect a deficit of only 0.2% of GDP, which speaks to the complementarity between the fiscal and the monetary authorities, which gives confidence to the market, especially the sophisticated, when this kind of relationship is demonstrated through even the stability in the market. Yes, there is need to deal with the confidence issues in the market, but I think to a greater extent the monetary authorities have tried very hard to restore confidence, hence the stability we're seeing and the promise and the credible promise of stability that is there now.
Mishek, interest rates kept at 35%. You also look at the statutory reserves, they have pretty much been kept where they were. What is your sentiment around that?
Yes, it makes sense from what Persistence has just explained, that the authorities are being cautious. However, in terms of managing expectations and anchoring those expectations, what the market expected was some kind of signal from the authority that the stability is here to stay. And it is a way of also addressing this confidence thing. I think at the beginning I mentioned that the monetary policy statement was very positive, except one or two things in terms of market expectations. The policy rate at 35% is still viewed by business as still very high, although to the credit of the governors or the authorities, there is the TFF, that special facility, which has actually been increased to 1.2. So in a way, that issue of expensive cost of borrowing has been addressed. However, in terms of signaling to the market, the market was expecting that the policy rate could be moved, maybe not even by many basis points, but just as a signal that this is the direction we are going. We know that there is always a time lag between inflation and the policy rate. I think there's a time lag. Percy would confirm, maybe 6 months. I'm not sure the model that these guys use, but about 6 months for then the policy rate to follow. However, it's just as a signal to the market. I think the market was saying, show us that this stability is here. And that's the ordinary man in the street.
Right. What is your sentiment as industry where the interest rates are concerned? I did speak to a good number of industry players who also expected there to be a reduction, even from just 35% to 34, 33, even 32. What do you feel at this point? Yes, there's the doubling of the targeted finance facility from 600 million ZiG to 1.2 billion ZiG. Your takeaway?
Yeah, I think speaking to a number of business players across sectors, the expectation was that the policy rate surely was supposed to be at least reduced even to around 30%, or as a step or signal that there is a serious, real intention to make liquidity cheaper. On the access to liquidity cheaper for the productive sector. I think the governor could then come around and argue that I've doubled up the targeted finance facility, but not only that, the cost of banking has also been rationalized, where withdrawal charges were reduced, while incentives were also increased on savings or deposits, and also the eradication of charges on balance inquiry fees. But not only that, I think there was also another aspect of MNOs. Mobile network operators, where there has been an element of money creation that the governor also had to pay attention to, where there were loans that were floating around and not backed by any commercial banking instruments, and the governor directed that those loans must now be backed by an instrument from a commercial bank. But I think Our economy really is now is still at a point where we are gradually building up on the stability. And we need to support this stability. We need to sustain it. But not only that, there's got to be deliberate initiatives now that we have enjoyed stability since, I think, 1 year or so ago into 2026. But deliberately, we then need to look at key aspects of sustained stability. One of the issues that we definitely need to continuously promote is the issue of value addition and beneficiation. Tied to it is productivity and general production. The cost of production, the cost of productivity, the elements of labor costs, elements of the production costs, elements of raw material procurement costs and everything must then be continuously be reviewed and addressed in order to make sure that a country's stability is tied closely to its ability to produce. So the moment, even that we are not able to produce, we may not be able to sustain the stability. But I'm happy that in the retail and wholesale space today, more than 85% of the goods that you find in formalized supermarkets, those goods are locally manufactured. So what do we need to do? The manufacturing sector, the mining sector, and all the production, the productivity pillars of the economy must ensure, we must ensure that we continue to pay special attention in terms of access to cheaper financing for them to be able to access that money and be able to plow it into the production lines and ensure that we continue to produce. It is now a matter then that the consumer must also be able to feel the stability. So there has been also another aspect where the consumer continuously then ask questions to say, you tell me that there's stability, but I'm not feeling it.
A very important aspect there of feeling. Before we take a break, from a consumer perspective, Gladys, may you speak to the impact of the reduction in terms of the bank withdrawal charges, the increase in terms of the amount of ZIG that one is now able to make, as well as, of course, the aspect of the directive to say, let all nano loans be underwritten by a sound financial institution. What is your sentiment before we take a break?
Thank you very much, Iban. From the consumer perspective, the reduction in banking charges, even the withdrawal charges, it is a positive development from a customer point of view, because it means that now the customer has more confidence in banking. The customer was averse even to just open a bank account or to leave funds in their bank account.
Hence mattress banking.
Yes, mattress banking. So now the customer has more confidence to keep funds in the banking circulation, which will also be an advantage for the banking sector. So there is now more confidence to open more accounts, and looking at the central bank thrust also of increasing financial inclusion. From that perspective, we are going to see a lot of positive development when we look at financial inclusion issues, even coming from the rural areas, even coming from the productive sectors, even just coming from a layman person in the street. They are now going to have more confidence in banking, because it was a major issue, the issue of withdrawal charges, which is going to actually help also increase savings. When we look at the real interest rate, we are going to encourage a savings culture, which is also going to help even in issues of investing, which is also at the end going to help the economy to grow.
Well, time for us to take a breather. When we come back, we look at the monocurrency roadmap. In the monetary policy statement presentation, the Central Bank Governor did hint on the conditions that would be necessary for the movement or the graduation from a multi-currency regime into a monocurrency system. The chase to be right back. Don't go anywhere.
Harare. Tune into the beat.
Capitalk 100.4 FM, your source for news, business, sports, fashion, and more.
Experience the pulse of Harare's culture and lifestyle.
Capitalk 100.4 FM, Harare's top radio station.
Join the conversation with Zimbabwe's top personalities.
Subscribe now for fresh and infotainment content daily.
Capital 100.4 FM, Harare's heartbeat.
Captain Wally J's about to take you to boot camp.
It's the riveting science and tech show that keeps you up to date with the hottest gizmos on the block and revealing the illustrious and innovative visionaries in Zimbabwe. So much to see, you'll keep swiping.
This cherry red beauty is the Dairy Auto M7 mini electric car.
They've designed our brute force incubator board.
Look at what we've got here.
Solar powered scarecrow was part of the project that I was supposed to complete.
Catch Swipe every Tuesday at 5:30 p.m. on ZTN Prime, DSTV channel 294. Get the picture? Catch exclusive interviews every weekday for candid, exciting, and thought-provoking conversations with your host, Erika Ndoro.
We talk about arts, we can talk about sports, we can even talk about politics, and sometimes we venture into a nice guitaristic play.
The one story where you can't get out of your head. Wakatarisa munhu so Erika like where you are sitting. Ndozongokona bata face so pasina munhu.
Wakasiya music yako iyo afro chakuti ndo music manje yemuZimbabwe.
And I'm sure they're still saying the same thing now.
Yeah, so
Shona kana kuti chindevere kana mumwe mutaure muno muZimbabwe ndiwe iwewe ndiwo rupawo rwako ndicho chidadiso chako.
Catch me, Erika Ndoro, right here on ZTN Prime every single Monday at 7 p.m. whilst we get exclusive.
Didn't graduate. I guess I blew it.
You couldn't advise him anything. He would just look at you and say, so who do you think you are?
We were just like really spoiled.
And then they just give me the receipt and I'd pay.
The guy walks in one day and then he says that he wants to make a movie.
He was blowing the money.
There was just like this habit that he had where as soon as he got money, it was gone.
I just didn't have the skills or the experience.
This money, I could see it disappear so fast.
They call me Racer X, or in this case, Racer J. All right.
Put your seatbelt on.
You're watching The Chase, Zimbabwe's premier current affairs program. I'm Eben Mabunda. I'm in conversation over the recently pronounced monetary policy statement by the Reserve Bank Governor, Dr. John Moshayavano. And in studio, I continue the conversation with Gladys Mtsopotsi Shumbambiri, a business and economic analyst, Mishek Ugaro, president of the Zimbabwe Economics Society, Persistence Gwanyanya, Monetary Policy Committee member of the Reserve Bank of Zimbabwe, as well as Denford Mutashu, President, Confederation of Zimbabwe Retailers. I'll start with you, Persistence. An indication that the 2030 deadline has been scrapped off, but there is a list of conditions that have got to come in place before we can run on a mono currency. May you jump in?
The road to monocurrency has been refined. I think the refinement of that road has been accepted by the market, in that the monocurrency is going to be condition precedent. And these conditions, to a greater extent, should reflect the voice of the market. So the central bank and other authorities should make sure that the conditions are achieved. And these conditions are necessary for the monocurrency regime to sustain. So if you look at the conditions, 8 of them, you find out that they give confidence about the sustainability of the monocurrency if it is to happen. But more importantly, because the US dollar itself, I have always wanted to describe it as a drag. It is very difficult to withdraw from the economy. So it is also important that as we talk about the US dollar, anything to do with the US dollar, we need to be careful about how that is perceived by the market or viewed by the market. Now, the central bank has taken the approach to say, let the market speak, let the conditions be achieved first before we can go into the monocurrency system. But it is quite comforting that despite these conditions, the authorities continue to give comfort relating to this issue, especially as regards the fears by the banking sector or those in the financial service sector. The governor, in the monetary policy statement and in his post-pronouncements, has been giving assurance even to those that are in the credit space, the loans, that even when you are when you have lent out money, you are still guaranteed of your money in US dollars if you have lent out in foreign currency. And even those that are the creditors, if the recipient of the loans, they are still guaranteed access to foreign currency to pay off the loans. So which is, to me, is quite comforting to the generality of the market, but also comfort that continues to be given by monetary authorities that even when you get into the monocurrency regime, it doesn't mean you are not allowed to maintain foreign currency account. You can still maintain your foreign currency account in the monocurrency regime. But what you are only expected to do is when you want to transact it domestically, you then need to approach the bank and get your money exchanged to the local currency for you to be able to transact domestically. So these are the assurances that the authorities are giving us.
Just to spit back very quickly, are we going to see the bureau system in operation in full force as we draw towards that?
We would have wanted that to happen, and we still want that to happen. And I think it's also an encouragement for the bureau de change to also up their game. I don't see anything that hinders them to participate fully in the economy. I think these are opportunities that are being created for the Bureau de Change, for them to take a clue on where we're going as an economy.
Right. Are you satisfied with the roadmap,
Yes.
given that the central bank governor has said, look, it could even be 2028?
Yes.
I know that's a date that he made reference to about twice. First, in presenting the monetary policy statement at the central bank, then second at Parliament. What does that make you feel as the Economic Society of Zimbabwe?
This is a matter that is very close to our hearts as economists. And I think building on to what Persistence has said, I think the critical, just to reinforce to what he said, the critical issue there is that it's market driven. There's no one going to demand or issue a declaration that now we've changed into monocurrency. No, it's the market. So you know what market does? You come with your US dollars and you want to buy something, and the shopkeeper will tell you, no, I'm not selling in US dollars. Go to the Bureau de Change and bring ZIG. That is the market speaking. So even if you want to insist in dealing in US dollars, if the market is shifted to ZIG, it will be in ZIG. And the conditions, what are the conditions? The critical, 8 of them, but the most important one is foreign currency reserves. So when we have enough foreign currency reserves and you can walk to your bank with your ZIG and get dollars to import, not to use locally, you have to use it to import. You are confident that you move into your bank to get foreign currency. The market will move. And like you said, that can happen anytime. It can happen beyond 2030. It can happen before 2030. But the point is, it's not a law that is going to be declared. It's the market which will drive itself. As the ZIG is stable, it gets accepted, everyone is comfortable, the savings are going on into the banks. You know, this shift will happen on its own. And that is very important for us to really explain to the market that you can still have a contract today for 20 years in US dollars, and it will remain like that even when we are in monocurrency. Unless you then agree when you are in monocurrency between the two parties, the lender and the borrower, to say, now it's you are part of the market. You agree, let's now shift. It's up to you. But if you want to maintain it in US dollars, you maintain it in US dollars. And then let me speak to the banks. There was that risk averseness of not wanting to lend long. I think,
and that's prevalent even in the mortgage market. Those that are getting into contracts from a real estate perspective.
We are now at
the planning horizon has been till 2030.
Exactly. We are now at a juncture where banks should see that the horizon is market driven. So it's up to their risk departments to decide or to project forward, to say, what do they think? How is the trajectory? So if they want to match that, they can do that. But the authorities have opened, they've said it's open. They've removed that suffix, or mutupo as it was by 2030.
Gladys, I can see Gladys is very much eager to respond. What is your sentiment, Gladys, around monocurrency waves that are hitting the market at this point?
Thank you very much. It is clear that the governor has moved from the deadline approach to the data-driven approach, which is market-driven. But for the monocurrency to be a success, I will reiterate again, it will depend also on the issues of confidence that have been happening previously. There has been a lot of lack of confidence. So the issues of confidence regarding consistency in terms of the central bank policy or the general government policies will also be an issue that will instill confidence in the market. And then the other issue will also be the issues to do with the parallel market premium, which is currently at 20% and below. Are we going to be able to maintain the parallel market premium as we move towards the monocurrency. If not, and if the premium maybe rises to around 50%, the monocurrency will not be a reality in Zimbabwe. And again, the government spending issue. Will the government be able to stick to strict government spending so that it supports the monetary tightening that is being implemented by the Reserve Bank? That would be my response to that.
Denford, industry, where do you stand?
I think my brother spoke about the quality of lending in the country, that it is short-term. I think that largely depends on the quality of the savings, because they've been transitory in the main. And banks wouldn't have so much to lend, especially in form of the quality of the deposits. So it's very key to drive the culture of savings and the quality of savings. That's number one for me. And then number two, we need to plug leakages. There's a lot of smuggling that is taking place. There's also a lot of leakages in terms of minerals. And we need to plug that. And also financial leakages. And my other issue is that policy consistency, predictability, and eradication of volatility is very important. Value addition and beneficiation, it is actually the bedrock of financial services stability and currency stability. Why do I say so? And I'm happy that government has already made a move by banning exports of raw minerals. That is a very significant move, because we also need to improve or improve the quality of our exports, enhance the quality of our exports. How do we do that? It is tied to value addition and beneficiation. I'm happy to have a company that is that depends on the lithium that we mine or the chrome that we mine and export it in raw form, coming into Zimbabwe to set up so that the electrical vehicles can actually be manufactured where the raw materials are mined. And it will actually be much cheaper for them to do that. So what we need right now is to create the environment that has got predictability, that has got consistency, and that has no volatility. But I'm also going to touch on the issue of behavior. A lot of the challenges that we may have today is the behavioral issues. The behavior by government, the behavior by the people, the behavior by the business community, and when we talk of behavioral traits, they emanate from history. The historical issues that may have happened in a particular economy have got an effect of shaping the behaviors that may actually be manifesting today or in the future. So deliberately, we then need to say, what can we do to make banking prestigious? Remember my father used to show me his bank book. There were two. Yeah, there was POSB and there was Beverly. Yes, there were two of the founders. Even in when he was in Zupco, he was actually you would see those books. Yes. And in Zupco, when you see someone with those books, you say, oh yeah. You see, so we need to restore prestige in banking. The people must be proud to be holding a bank account, but you cannot be proud if you've got that account deducted monies from it, even some of the money that you don't have, and you are in the negative sometimes. So those are the issues, the structural issues that we need to resolve in order to bring the people back into the prestige of holding bank accounts and keeping their money in the bank. So I think there's quite a lot of things that we can address, but those are some of the key issues. But a country's currency is as strong as its production and productivity capacity.
Well, we have come to the end of our program. I would like to thank my guests, Gladys Mutsopoti Shumbambiri, business and economic analyst, Mishek Ugaro, president of the Zimbabwe Economic Society, Persistence Gwanyanya, Monetary Policy Committee member of the Reserve Bank of Zimbabwe. Denford Mutashu, President, Confederation of Zimbabwe Retailers. Ladies and gentlemen, thank you for appearing on The Chase.
Thank you.
Fantastic. And of course, that's a wrap on The Chase. Do follow us on our social media handles at Zim Papers, as well as, of course, at ZTN Prime. I'm Eben Mabunda, the money man. Let them do what they do. When we do what we do, we mean business. Thank you for watching and have a good evening.